Happy Thursday, guys. Okay, so I was going to do like a leg off of what Eric was talking about, and so let's choose another topic no one wants to talk about, and that's even more boring. Stocks. Ha. No one cares about stocks, really. Well, a lot of people do, especially companies, because obviously their company runs off of stock. So, if you guys know what stock is, well, whatever, you're gonna have to listen to this. So, anyways, what is stock? So, stock, it's kind of hard to explain, like, physically what it is. But, basically, companies need money so they can grow. And that goes towards, like, buying materials and stuff, and developing new products, buying stuff, rent for giant factories, I don't know. And so, to do this, they split up their ownership of their company into smaller shares that they will sell to people and the public. And sometimes they do private investments, which are normally for people who have a ton of money and are willing to maybe get a larger percentage, and those are private ones, so, yeah. Anyway, so why do people buy stock? Stock shares are normally a set percentage, and that's like 0.001 or something. One, or less than that. It's normally split, and then split. It's like where you take a little block of cheese and you split it in half again, split it in half again, until you're basically left with an atom, and that's what you get. So you really don't own really anything of it, but it's no, you sell them and they get money, because, yeah, okay. Anyways, the main idea is that people buy stock because they're normally worth, I think they go for $32 currently. Might have to check that, but I think it's $32. And you get this imaginable cube, basically. That's what I think of it as. And so what you can do with this is that you wait. It's like a good idea. Like, people do it when, like, for video games, for example. Like, people will buy stock right before a giant video game comes out, and let's say it's worth $32, that's what you bought it for. And then a ton of people buy stuff from that company, and so the stock market rises. And then when it rises, then it's worth more. So your $32 has now maybe increased to maybe be worth $38. And then you can sell it, and then you gain money, even though it's a pathetic amount to bother even gaining. Sometimes in the long run, like, especially all those people who invested in Microsoft are now millionaires, because they invested a lot of stock. Sometimes people will only have one share, some people will have 100 shares, and that's a lot of investment, because that's also where the ball game comes in. Whereas if the economy drops, well, bullshit, all your stuff is now worth like nothing. So, and that's when the economy crashed, all this stuff just went down, and then no one bought stuff, and it went down even more. And so, yeah. So, if you're curious about, like, what is the stock market, it's, well, that's more hard to, explain. But, what came first? Apparently that's the top question. What came first would be stock. And then, because people, like, owners, would then sell it out to their friends. Say, hey, you want to buy this? I don't know, this is, like, 1800s or something. And then they're like, hey, guess what, maybe there should be a stock market. And so they have this actual thing now called the stock market. So, which I'm not sure, it's not exactly a place, but I guess it is, because you can call Wall Street, like, the stock market place of our country. I don't know. But that's basically, you can call up your person who's in charge of your stocks. Personally, our family lets Mr. Zimmerman handle it. He's one of my dad's clients, and he's really good with stocks because he listens and watches it every day. And so he's obviously done pretty well, because the more you know about it, well, the better off you are. So, sorry, this was kind of a boring one, but now you know what the stock market is. Maybe you'll invest later in life. So, invest smartly, my friends.